Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Luton, as well as my twinning partner and Managing Director of International Content, Emily Parker. Good morning, you two.
Good morning.
I didn't get the memo. Hi.
Good morning.
I didn't get the memo.
We're seeing red candles. Let's have a look. Checking out on Bitcoin, the CoinDesk Bitcoin price XVX index is in the green. Oh, about 0.2%. Right now at $42,218. The CoinDesk Ether index is at 3124, down slightly, almost 0.5% over the past 24 hours. And the DFX CoinDesk DeFi index is trailing behind almost 6% for the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data. So looking at some of our top stories of the day, we have a new report out. Emily, the EU markets regulator is calling for a ban on proof-of-work crypto mining. What's that all about?
Yeah, I mean, it's interesting more on a symbolic level because the EU accounts for a very small portion of mining, especially proof-of-work mining. It's all concentrated more now in the United States, but it's definitely an interesting trend. I mean, we already had China clamp down on mining. There are rising voices in the US against proof-of-work mining as well. So yeah, I look at it as more as like a symbolic warning of what could potentially be the fate of proof-of-work mining in countries that actually have it.
Yeah. The ESG debate continues on. And Lawrence, mixed results in the markets.
Everything is down except for Bitcoin, which is up a little bit, as you were saying, and Solana, Filecoin, and for Emily's sake, Dogecoin. That's the only ones that are up. Everything else is pretty much down. It is a market, no idea what's happening right now. It's just kind of bummed out. Like, I think that's the only way to describe it. It's just a bummed out market. It's just, everyone's like, they had no motivation.
Bit of a correlation in the traditional markets as well. Yeah. Let's have a deeper dive with our crypto markets guest.
The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
All right, is it going up? Is it going down? Joining us now to discuss the crypto markets is Greg King, founder and CEO of crypto investment firm Osprey Funds. Hello there, Greg. So Bitcoin is down about 40% from its peak of $69,000 in November. Are we in a crypto winter of sorts?
No, I don't think so. I mean, it feels pretty balmy out here compared to the other winters we've had. If you live through those, this is still shorts weather. But I think that the market's digesting a number of things. So number one, crypto is trading a lot more like tech. You have correlations between, let's say, Bitcoin and the NASDAQ that went from essentially zero as recently as a few months ago to almost 0.5. Right, that's still a diversification away from markets, if you will, but they are a bit more correlated. And why is that? I think the broader space, everything outside of Bitcoin that's happening in crypto is tech investing. There is a lot of commonality between investing in a lot of these crypto projects, let's say like a Solana or like a Polkadot or something along those lines, to emerging technology companies. So you have that, and remember that companies. Let's use that term broadly here, that don't have earnings are very sensitive to interest rates, right? Because you have to discount the
So are you seeing a correlation
value
with traditional markets and the inflation and the Fed being more hawkish?
Exactly. So just look at what's been happening with 10-year rates recently, right? You see that ramping up. Everybody's been talking about that in more traditional space. Risk assets like crypto are going to sell off or experience a bit of churn as the market adjusts to a different macro environment. So we see this as temporary. Can't say how long it'll last, but we're still bullish, obviously, the space. And I would suspect that at the end of the year, values are much higher than they are now.
So, Greg, I kind of want to go a little bit further into this whole idea that, crypto trades more like a NASDAQ tech stock than it would an inflation hedge. Because, guys who walk around with backwards white baseball caps and Oakley sunglasses will tell me that this is the ultimate inflation hedge. But you don't see that happening right now in terms of, the macroeconomic factors such as the ridiculous amount of inflation we've been witnessing over the past few months, you don't think that that's a factor. It's more of this unease about tech in general, which might be leading to this sort of, if not total sell-off, at least weakening in the markets.
Well, if you think about the whole concept of inflation, and of course we know historically inflation's been on average 3%, right? The thing about inflation is it's insidious, right? You kind of typically don't really notice it's happening. It just nibbles away at your purchasing power over long periods of time. Emphasis on long, right? So I think as an inflation hedge over, 5-10 years, I think crypto is an amazing potential inflation hedge because of the appreciation that we would expect. Just like stocks are, right? People tout stocks as an inflation hedge. If on a day-to-day basis you're trying to hedge, moves in the 10-year, I wouldn't necessarily look to crypto to solve that purpose. But I don't think most investors think that way. I think investors are concerned because inflation is up, and they should be. But what's the way to combat that? I think the way to combat that is to devise a portfolio that you think is going to appreciate substantially more than inflation over time. And from that perspective, I think crypto is a great consideration.
But nonetheless, I mean, if there is this view that tech stocks and crypto do trade very closely together, why wouldn't somebody, let's say, take a leveraged position in tech at the moment? If that's the case, if they're going to play this market over the next, let's say, 12 months, 6 to 12 months, why not just take a leveraged position in tech equities and not face the kind of volatility that you might see in crypto?
Well, I think, depending on your leverage, that could be a more volatile position to take. And of course, then you're substituting in a different set of underlying potential returns. If you're, for example, bullish on Solana, but then you're taking a leveraged tech bet, it's just a different bet. We want to be part of this move away from centralized technologies, right? And that's what crypto represents. We're very bullish on the ethos of crypto, on what's happening. I think it's much more than just blockchain and cryptography. It's really about how people want to interact with each other, how they want to make investments, how communities want to gather together and around what projects. And I think that's just going to take over time. But right now, people are focused on the macro environment because of inflation. These are numbers we haven't seen in a very long time. And so everybody's adjusting. The other thing I should point out is crypto has a lot more institutions involved now, right? And they're going to be a bit more concerned around quarter ends, year ends, things like that. And so I think overall volatility will continue to come in as you have more players in the crypto space. But you could see a bit more adjustments being made in relation to macro factors like interest rates.
Greg, just shifting focus a little bit, one of the themes of 2022 that many have brought up, and I believe you have thoughts on this as well, is the rivalry between ETH and some, other, depending on who you ask, some Solana or Polkadot. And I'm just curious what your thoughts are on that. Do you think this is going to be the year when those really come to a head?
I don't know if they've come to a head, but I think the battle will definitely heat up. So you have Polkadot, for example, is probably the best example there. Founded by Gavin Wood, he was the chief technology officer for Ethereum, left the project 4 years ago or so, I think, to create Polkadot, which is almost like a layer zero chain that envisions a multi-chain universe and interoperability between the two. But the issue with Ethereum, as everyone knows, is gas fees are so high. It's in huge demand because of NFTs and DeFi. But there are projects like Polkadot, like Solana, that are starting to nibble away at that. And I do think that'll heat up. Last year, there was such a push, and those projects weren't quite there yet. But you have the parachain auctions that have started now with Polkadot. And so, it will definitely heat up this year, I think.
Do you have a price prediction for Solana, for example? Because, Solana grew by an amazing percent last year. So I'm curious what you think will happen this year.
No, I don't have a specific price prediction. I think that the market share, if you think about the NFT space, for example, I think that their market share will absolutely grow relative to Ethereum's. I think that they've experienced a few network issues this year, but I've said previously that this is investing in crypto is like investing in tech companies, but with the visibility of what's happening, as they develop their software. And so we all see the kind of fumbles and foibles in real time, and that's good and bad. It produces volatility, but it also brings transparency, and so that's great. But Solana's getting there, and I think they'll take a larger market share this year than they did last year for sure.
Are you seeing the greatest returns out of NFTs? And if so, how are you navigating the NFT space, and where do you see the most opportunity?
Yeah, so NFTs are really interesting, and that's a broad term. I think right now it applies mainly to what a lot of people would consider art projects, right? Digital art. These are pieces of web culture, and NFTs, in the face of an overall sell-off in crypto, are still on the rise. It's a little difficult because we don't exactly have a broad-based NFT index out there that's terribly reliable. So you have to kind of track the different projects and.
We're having some technical difficulties with Greg, but we'll wrap it there. That was Greg King, CEO of Osprey Funds. All right, thank you for that. Coming up, we're going to be speaking to eToro. They're going public via a SPAC deal. More next.
Hi everyone, my name is Naomi Brockwell, creator of NBTV and co-host of The Hash, and you are watching CoinDesk TV.
Hey, welcome back. Checking in on Bitcoin right now. The CoinDesk Bitcoin price XVX index is currently at 42,170 Bitcoin, slightly up about 1.4%. The CoinDesk ETX Ether index is at 3127, slightly down about 0.3%. The DFX CoinDesk DeFi index is at 405, retreating about almost 6% for the day.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
JP Morgan saying Ethereum is losing NFT market share to Solana. Since August, Solana has been capturing NFT volume share from Ethereum as the second largest cryptocurrency by market cap has seen its dominance in non-fungible tokens shrinking because of congestion and high gas fees. Joining us now is eToro U.S. Managing Director Guy Hirsch. Hello there, Guy. Thanks for joining us. So I understand you were managing eToro's U.S. business. Now you've shifted to expanding their NFT business. So on this latest news, ETH's market share of NFTs has dropped to around 80% from about 95% at the start of 2021, according to JP Morgan. Do you see this trend continuing on?
Yeah, we do see an intense competition for the exponentially growing NFT market. That is both in terms of competition, direct competition to ETH, but also in terms of all sorts of layer 2 solutions in order to deal with the very problematic issue of the high gas fees. So we do see this competition intensifying. We do see more L2 solutions being developed in order to allow more people to participate without paying all these high gas fees.
What are some of your other predictions for 2022? Anything that would be particularly surprising?
I think what we will see is in crypto markets, we saw, and we've had a lot of discussions. You do a lot of discussions about that on this show. And that is institutional participation in the crypto markets. So if in 2018, 2019, 2020, we all analyzed if Goldman or Morgan would go into the space and start allocating to crypto. I think now with NFTs, we see a different type of institutional participation. We see companies like Nike and Adidas and luxury brands such as Gucci and LVMH going into the NFT space. So that is a different type of institutional participation. And I think that would give kind of dramatic boost into crypto and crypto adoption as a whole, because NFTs are still crypto. So I think that is going to be quite surprising to people to see a lot of money being flowing into the NFT, or essentially into crypto from institutional players, but not the traditional finance institutional players, but more brands.
So, Guy, what L2s are you looking at that right now that you think are going to benefit from this growth in NFTs?
We see, without kind of naming all sorts of names, but we see a lot of really interesting, clever implementations in ways that would allow people to essentially trade NFTs with zero cost. That is essentially the goal, with zero cost. Still register it on the blockchain, still registering in a way that is safe and secure. But I think that is still early to kind of point all sorts of kind of clear market participants that have a very solid solution. But we see a lot of money pouring into an attempt to develop this on top of Ethereum in order to solve for this issue. So I think it's still early to say names, but we see a lot of energy in that space.
So if you're not going to name the layer 2s, how about layer 1s? I mean, is there anything in the layer 1s in particular that you think are going to benefit from the growth of NFTs?
I think there are a lot of kind of, interesting, as we just talked about with regards to Solana, with regards to Ethereum, that market dynamics would get more people into trying to figure out if they want to get into the space and want to basically propose maybe a different mechanism to allow people to trade these assets. Not particularly, I think, other than the obvious competitions between the protocols we already named. I don't see any kind of new entrant into the space, but there will be a continuation of changing of dynamics, maybe additional market share being lost to Solana from Ethereum, things of that nature. But again, I think between that and the L2 solutions, we're going to see some additional loss of dominance for ETH with regards to NFTs, unless the gas fees will be solved.
Now, another 3-letter acronym is ETFs, and you guys are getting involved now in equity ETFs. How are you able to do that in terms of regulation in the United States? I mean, we've seen crackdowns on crypto companies that were wrapping or holding equities in crypto. Are you guys getting involved in that at all, or are you just creating your own ETF that's traditional style?
So we were very excited to announce that we got into stock trading in the US, and we have a stock trading offering right now being available to investors in the US. We did that through very careful consideration to compliance and legal aspects, by setting up different entities that each serve the asset class that it is permitted to serve from that particular entity in a way that is fully compliant with all rules and regulations. And so for that particular matter, we instituted an introducing broker-dealer. We registered with FINRA, and we did all the necessary processes and procedures and registrations in order to make sure that we are fully compliant. Now, obviously, we made full disclosure with regards to our crypto business to the equities, to the regulators, that is the SEC and FINRA, and made sure that they know about how our business works and bless that in order to launch our stock trading offering in the US.
So why did you get involved right now with equities at a time? Isn't it kind of like a weaker market? We have a weaker economy. Is it? Why not just focus on crypto for the time being, and then maybe get involved in equities when things are, looking more up? Or is it just takes so long that you might as well launch with it?
That's a fantastic question. And outside of the US, which is where we started, we added throughout the years more and more asset classes because we believe in diversification. We want people to diversify their portfolios. And so we hold a kind of a world view that if you are exposed to crypto, which is fantastic, you should still consider other asset classes such as equities in your portfolio in order to be diversified. That is a very, very important principle of investing. And so we provide a lot of education, a lot of tools, a lot of content for people to understand how to look at their investing life in a way that is holistic, diversify, and then particularly now in the US, allow people to have some exposure to the stock market, to equities, alongside their investments in cryptos.
And Guy, eToro is expected to IPO via SPAC reverse merger with FinTech Acquisition Corp 5 in the first half of this year. Do you have an update on what's going on?
We announced that we have successfully negotiated with our PIPE investors an extension to the deal that we've announced earlier in last year. And so we were very happy that all of our investors gave us, or the investors that were part of the PIPE deal showed a lot of confidence, and we are continuing on that process with the SEC, and we hope to when we're going to have an update on that, I'm sure we're gonna be announcing it. But for now, this is what we've announced, that we extended that timeline till June, and we continue to work with the regulators in order to complete the transaction.
All right, Guy. Thanks for the update. Appreciate your insights. That was eToro U.S. Managing Director Guy Hirsch. Coming up, we'll have our CoinDesk Global Policy and Regulation Update with Nick Day.
When we say we want to reimagine money, it turns out we're going to the heart of the matter. Imagination has always been a key part of what money is. Imagination, in the form of cultural creativity, is also something that the cryptocurrency community has in spades. And to the outsider, that can be a reason to dismiss it as frivolous, as something built on nothing. To dismiss it for these reasons, though, is to ignore that all money is imagined.
Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick. So, Russian authorities say they've dismantled ransomware group REvil at the request of the United States. What's going on there?
Good morning. Yeah, so news broke out last week that Russian police officials have arrested, I think, up to 14 different members of the REvil ransomware group, including, they say, perpetrators of the Colonial Pipeline and JBS ransomware attacks last year. If you recall, those were the pretty significant ones. Colonial shut down gas to a number of states because they were unable to distribute fuel, and JBS is a major meat processor, which exacerbated already kind of existing shortages. And so these shutdowns are pretty significant. The officials said that they seized several crypto wallets and cryptocurrency. They didn't say how much in crypto specifically, but overall, several hundred million rubles. So it's pretty interesting. It seems to be maybe a first step, but also kind of just a play to garner goodwill. Not to get into politics, but there's a bit of international tension between the U.S. and Russia right now. So this arrest might just be an effort to try and kind of calm these.
Yeah, I was just going to ask Nick. I mean, we're seeing right now that we're at a pretty dark place right now when it comes to the United States and Russia because of what's going on or what could potentially happen in Ukraine. So is this something that was this initiated by the Russians as a way to say, look, let's try to ease our way out of this tension? Because they seem very convinced that something is going to happen on the border with Ukraine. We're not quite sure what it is yet. They're very nervous, and we're very nervous. And is this maybe was this initiated by the Russians really, or was it the Americans asking the Russians for help here?
Well, the Russian police authorities say that they did so, at the U.S.'s urging. And the U.S. has urged Russia to take action for months now. So the two interpretations I've seen most often seem to be either one, this is a good faith effort by Russia to try and tamp down on some of these tensions and say, hey, we're willing to work with you, with the US, or two, this is an attempt by Russia to just try and get some positive headlines after weeks of this country is gearing up for war. So either way, though, taking down a ransomware group by arresting the operators behind it is definitely significant. Ransomware has been a key issue for the U.S. at least, and several other countries over the past year and a half. And the fact that we are now seeing not just sanctions but actual arrests and possible trials happening, it's probably going to be more of a signal to other ransomware developers than simply sanctioning crypto exchanges, for example, alone might be able to accomplish.
And they say crypto can't bring us all together.
That's what I was just thinking. One way that cryptocurrencies is uniting nations. All right, Nick, thank you so much for joining us. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for his newsletter, The State of Crypto, on CoinDesk.com. Let's check in with Crypto Twitter for our tweet of the day. This one from investor and analyst Lynn Alden, tweeting, investors these days often say that fundamentals don't matter anymore. Well, fundamentals matter a lot more during periods when stimulus stops flowing. Always good food for thought from the ever-wise Lynn Alden. That's it for First Mover. Thank you, Emily and Lawrence. I'm your host, Christine Lee. Meantime, check out The Hash at noon Eastern, as well as All About Bitcoin at 3 o'clock. You're watching CoinDesk TV. And next up, stay tuned for the Daily Forecast with Angie Lau to see what's happening in the Asia crypto markets.
Welcome to the Daily Forecast, January 19th, 2022. I'm Megha Chadha of Forecast News, covering all things blockchain. Malaysia-based digital securities exchange Fusang claims its fully regulated equity token IPO is a world first. We'll take a look at that story and a whole lot more coming up. Let's get you up to speed from Asia to the world. Let's kick off with some of the top stories out of Asia today. First up, transaction volumes using China's eCNY have surged. The People's Bank of China says total transaction volume since pilots began in 2020 reached 87.6 billion yuan, or around $11.2 billion by the end of December. That's a massive 140% increase since data was shared in late October. It also said 261 million personal digital wallets have been opened, but for a country with a population of 1.4 billion, that means there's still a long way to go. The central bank says pilots will be expanded to serve the real economy and people's lives, with recent pilots offering digital yuan coupons for public transport fares. However, hopes of using the upcoming Winter Olympics as a showcase for the currency may have been thwarted as ticket sales to the public have been banned following an increase in COVID cases. And staying in China, the country's ongoing efforts to combat crypto crime may be bearing fruit. A report from blockchain data tracker Zhangke Liannan shows a total of 5,137 legal judgments were made on crypto-related crimes on the Chinese mainland last year, a slight reduction on 2020's total of 5,170 judgments. The company said it helped facilitate investigations of almost 750 cases last year, with almost half of the judgments centered around pyramid schemes, while 28% were fraud cases and 12% were related to online gambling. China banned all cryptocurrency-related transactions back in September, so it will be interesting to see how those numbers change this year. You can find those stories and lots more at Focus.news. Malaysia-based digital securities exchange Fusang has obtained regulatory approval for an IPO. In what it claims is a world first, the exchange is to offer fully regulated equity tokens representing direct shares on the blockchain. Focus News' Timmy Shen has more on this new approach to raising funds.
The tokens, which represent Fusan shares in digital form, will be recorded on a blockchain rather than in a traditional share register and will be listed on the company's own Fusan exchange by the end of the first quarter.
This is not a token that is mapped to an offline paper share somewhere. This isn't a derivative or something like that. These tokens really are the share certificate. And we honestly believe that this is the future of the security token market.
And while other companies, including Singapore-based DBS Bank, have issued security token offerings in the past, Chung says this is the first IPO of fully regulated equity tokens.
We do all the same regulatory filings and we really follow all the same steps as any company going public on any traditional stock exchange, but in digital format.
Chung says he hopes the unconventional IPO will make it easier for investors to get involved, as they won't have to go through brokers or intermediaries. As with any traditional IPO, Fusan will be publishing a prospectus imminently with 2.5 million shares to be offered at a fixed price of $4 apiece for a total IPO of $10 million. For Forecast News, I'm Timmy Shan.
Meanwhile, Hong Kong-based Animoca Brands has announced a $358,888,888 fundraising round, valuing the blockchain gaming and metaverse company at $5 billion. However, that's still small fry compared to one other well-known name in the blockchain space. Earlier this month, NFT marketplace OpenSea said its latest funding round valued it at a whopping $13 billion. And why all the eights, you might ask? Well, it's seen as a lucky number in China, as the word sounds similar to the one meaning to prosper. Animoca says the funds will be used for strategic investments and product development, with building an open metaverse among the company's goals. NFTs are all the rage at the moment, and it seems just about everyone is either issuing them, buying them, or selling them for millions of dollars. Whether it's Walmart or Crocs or the Indonesian student who mucked up a cool $1 million when he turned about 1,000 selfies into NFTs. You could have even picked some up if you caught the latest Spider-Man movie at an AMC theater near you. There is so much to learn about NFTs, and we at Forecast have decided to take a deeper dive into the world of non-fungible tokens and explain how they work and what difference they could make to our lives. Over the next month, we will be launching a series of explainer videos to talk everything NFT. But for now, here's a sneak peek just for you on today's NFT Insider.
Because each NFT is cryptographically unique and of a limited edition, it helps creators ensure the scarcity of the digital asset, which assures buyers and collectors that they hold the original. It's this scarcity and proof of ownership, along with the demand for and interest in crypto art, that makes NFTs so valuable. But NFTs aren't just limited to 2D and 3D digital art. While these NFTs might be the most popular, creators can mint a variety of artistic media. Gaming developers are minting NFTs for avatars, skins, and other in-game assets. Musicians are packaging MP3s and other exclusive content as NFTs. Fashion labels are releasing NFT collections that mix clothes with virtual equivalents. Sports teams and athletes are also minting collectibles, and some are experimenting with NFT-based news publishing. Other NFT collections, like those released by Bored Ape Yacht Club, come with perks, which give NFT owners access to a social club in the metaverse. You may scratch your head at a $650,000 virtual yacht, non-fungible toilet paper, and a VR house on Mars. And NFT speculation is also a thing, with crypto millionaires and other blockchain natives trading NFTs like investments. But NFTs are bringing change to lives and bringing real-world impact to local communities.
And that's the Daily Forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Megha Chadha. Until next time.